Hi, everybody. I'm Dan Hodgman, and this is the market recap for Wednesday, November 18th. I hope you guys all had a good day. I think there were some pretty good opportunities. When I typed in the title about 25 minutes or so ago, markets were, for the most part, still relatively range-bound. Obviously, if you've looked at the markets in the last 10 or 15 minutes, you have seen that they are no longer range-bound. They are equities in particular. They are starting to extend lower. Woke up this morning and found out that the FAA had approved the 737 MAX to go back into flight. Big news, right? We were thinking, gosh, I hope I was long Boeing. Maybe the stock market will really like to hear that news. We have seen potential vaccines coming out in the near future. So, man, maybe the market's going to go higher. That's not the case. I believe Boeing hasn't really done much. I know they opened up a little bit higher, but I don't think they've done much since then. And it really has to do with why these markets are struggling to get back to those highs that we just recently made. And the word is coronavirus. Cases continue to surge. Shutdowns, lockdowns are starting to take place all over, not just the country, but around the entire world. Just in my neck of the woods, I know Chicago has gone to a stay-at-home order. Michigan has shut down all indoor dining for the next 3 weeks with potential extension after that. Wisconsin, we're not there yet, but I can't imagine we're far behind. So, with that being said, stock markets are going to really struggle to get going. We know what happened the first go-around of the shutdowns, of the stay-at-home stuff. We all know what happened there. It's fresh in our memory, and we can only imagine it's going to be equivalent, if not worse, this time around, if we really do go into that nationwide lockdown like we did before. And I'm not saying anything against it. I'm just thinking from the economic standpoint of what these markets can do, right? And that's what we need to be thinking about. How do the economics affect the markets and affect what we're doing each and every day? We see the dollar continue to take a little bit of a hit. The yen has been on a beautiful trend to the upside, not making huge moves, but still continues its grind higher. It looks like an old S&P chart before we had all this crazy news all the time. So those are some things that we just want to be cognizant of. And again, with everything going on with these lockdowns, with the shutdowns, with everything going on geopolitically, especially here in the United States, will the talk of stimulus come back? That's going to be my big question. I know some have said yes, they would like to get those conversations going. Will it happen? Will it happen before January 20th? When the transition of powers take place in the executive branch here in the United States. Will something happen prior to that? You know, that's going to be the big question. If not, hopefully they come in fairly quickly and execute something there. Time will tell. Our job is not to trade what we think is going to happen. Our job is to trade what these markets are doing. And right now, it looks like they're starting to spill over just a little bit. We had the crude number come out today. Not huge, right? Nothing big there. 0.8 million barrel boost. Fundamentally, what does it say? If we are adding supply into the market, therefore price should move lower. Price really hasn't done a whole lot just yet here today. That one as well stayed fairly range bound. We are still in the middle of a rollover. Again, I mentioned it yesterday. If you guys didn't catch, the Coach's Playbook yesterday, that's exactly what we were discussing. Rollover. What is it? What's happening during it? And things to be cognizant of while trading it. Right? That's really important. I had a question earlier today come in from a trader asking just about what's going on with the bonds. And when he sees an auction in the bonds in the direction of the market moving, what does that really mean? Well, I said to him, we don't technically know what's going to happen with the bonds, right? We don't know what's going to happen in something like an auction there. We don't have all the information. That's a very volatile time. Volatility spikes in the options world when an auction comes out. If you're looking at something like the bonds, the 5-year, 2-year, 10-year, 20-year, 30-year, the ultra bond, bonds and notes there, obviously. When those auctions come out, what's really happening? Well, we're really kind of missing what's going on in the options world. It could increase volatility. People could be coming in with large orders of calls or vice versa puts. And when they do that, those positions are being hedged with the bond. People aren't so much concerned about the price of the bond for the most part, or the direction where the bond is going. For the most part, they're just trying to make sure their position's hedged and they're getting filled at a price that's not costing them. If anything, they're trying to get filled at a price that they might be making money. So those are things that we just want to be thinking about when we don't have all the information at hand, especially in things like economic releases. There's still information continues to flow out. We see it all the time when Jerome Powell speaks after the FOMC statement, right? We get this idea of interest rates are staying the same, going higher, going lower, whatever the information that the number that comes out. We get that, but what we don't get right away is the follow-on information that he says. We've seen it countless times where the interest rates stayed unchanged, but the rhetoric that he used around why they stayed unchanged has adjusted. We've saw it so many times this year when we talked about interest rates being, or the economy is hawkish. They use that term. They use the term pending. They use these little terms that really adjust everyone's viewpoint on those things, right? And so I cannot stress it enough. When we don't have all the information, wait for that information to process. Be patient. Don't feel like you have to jump in because that market is moving. Just because it's moving, we got to understand why it's moving and why we're going to get in at those levels. So that being said, I digress. Let's go ahead and take a look at these charts and see what we've got going on here today. As always, starting with crude oil. Again, if you have not rolled, we are in the January contract. CLF 1 standing for 2021, right? Crude oil, F for January, 1 for the year. All right, so just want to make sure everyone knows we are not just in a new contract month, but we're in a new year. We've gotten very comfortable putting the 0 at the end of things. Now we're going to start putting the 1 at the end for the year for all of these markets. So this market, we opened up sitting on, not yesterday, but the prior day value area high. Again, those levels of high volume are always going to kind of continue to come into play. Market finally broke through there in the overnight session, and it just sat on it really nicely. And that's right where this market opened up. To me, when we see this market push right down to that level where we found that support in the overnight session, to me that says this is a chance to start looking for opportunity. And you know what? Maybe you were going to wait. You didn't want to get in before the number. We got a chance after the number multiple times to say, hey, here's a great chance to take this market long. We could have sat in that market, and the best part about this entire setup and this exiting this trade, chances are, if you're like me, you're probably looking near that overnight high to exit your position. We start to notice this market does not have any buyers coming in to really extend it any higher. If we sit at a similar price for 2 hours, that's usually going to be a sign that says we're having a really hard time getting above this price. This is a chance that I'm okay with saying, all right, we're going to move our profit target down. We're going to get out of this trade, and we can look for that next opportunity. Maybe you caught the break. If not, I think that was a really nice opportunity here during the regular trading hours to take that long to the upside, even though we knew that the number, granted it was a boost, it was a small boost. We had this emotion here. Market pushed higher, then people starting to process that number, and from there, the breakdown took place. Next, let's go ahead and look at the S&P 500. Like I said, it's been a little bit since I looked at it, and we can see this bad boy is extending lower. We are back into weekly kickoff area. I should adjust this. Weekly kickoff high there, and this guy comes all the way down. 3,500. All right, so we are back in weekly kickoff territory. This market, what's going on here? Big questions to be asking ourselves. Really nice opportunity throughout the day, utilizing yesterday's value area very nicely. Market opened up right on the high side of yesterday's value area, fairly close to last night's overnight high. Great opportunity to say, coronavirus is still out there. I'm okay taking some shorts, right? I'm pretty comfortable right now looking at some shorts in this market. Market broke down and we just stayed well within that range. Market moved over very nicely. And then here towards the tail end, big sell-off. I don't have a ton of information on this. Hopefully by tomorrow morning, we'll have a little bit more justification as to why this market sold off. So that's what we're seeing here right now. I'm going to be cautious. I got to figure out why this move happened before I'm even going to think about doing anything else. And you guys know me, I'm really not doing a ton in the overnight session. So unfortunately, I'm not in any sort of position and I was not hurt in this break because I think the move was from the high side of the range to the low side of the range. Get out at the low side of the range, be done. Lock in our profits of a nice approximately 25 handles there. I'd say that's a pretty nice short to make one execution on for a day. All right, let's go ahead and look at the NASDAQ. The NASDAQ was holding up a little bit better than the rest, but it looks like it's finally spilled over. Let's remember, settlement price all the way up here at 11,975 in the market all day. Just worked around it. All right, we finally last night, we broke below this trend line that we were looking at in yesterday's session. Again, crudely drawn trend line, but kind of paints a little bit of a picture for us. Market broke below it and really worked lower in the overnight. This is where we're starting to say this. We are now establishing lower lows. We said over here, lower high, or higher low, higher low, higher low, higher low, and a higher low once again. We continuously saw these higher lows when we looked at direction. We have changed now. But what I love to see here is that trend that we were keeping an eye on. If we defined a little bit of a channel, that market still found resistance every time it tried to accept back into that channel or accept above that trend line. We saw it try in the overnight session. It rejected really nicely, worked ourselves right to the prior overnight low, and that was right off the open. Market opened up right at that prior day overnight low. Opportunity to say, okay, we've just slightly made a lower low. Where's the question? Where's my risk? If I go long, where's my risk? I'm looking at the long here and I'm saying we don't have a ton of risk on the long side. If I go short, we probably have a little bit more risk to the short side. So if we're running that synopsis and running that through our heads, it's smarter usually to take the trade that has the least amount of risk. Where can it go? Well, it ran really nicely up to that trend, but really we saw it run right to that overnight high and just barely through it. So we had a lot of validation of what can happen at this price. And oh, by the way, not only did it check that overnight high, it checked yesterday's value area as high as well. So this thing hit the extremes of yesterday's trading hours and again, rotated right back over, stayed within range. And then this afternoon, we obviously, this last half hour or so, we saw the big time breakdown. Next, let's go ahead and look at the gold, which seems to be moving a little bit as well. Market opened up on our lows and initial move was to move higher. It did exactly that. It came right to the overnight swing high. Not the overnight high. Obviously, we opened up a little bit here, but we came right to the swing high from the overnight session and just shy of yesterday's value area. Market sellers came in overpowered there and just crushed this thing all the way down, almost $20, just shy, I think about $16.50, give or take, down to the low side and right to where this market opened up. Funny how that sometimes works, and now we're kind of defining some sort of a channel. We're sitting right on the low side here. We could say 1868 and right up to essentially where we saw those two swing highs, 1882 on a short time frame thing. Those are some things I'm going to be paying attention to. All right, let's take a look at these currencies and we'll get the heck on out of here. Euro, for the most part, up until the break that's happening across the board right now, the euro stayed relatively tight all day. Again, overnight session really creates the opportunity in these currencies. Once that U.S. session opens up, we get fairly range bound. We checked our high at yesterday's value area low. From there, broke back down and fell right to yesterday's value area low. And that's exactly what this market did as a range. We really just looked at value area high and value area low from yesterday's trading, or we can even look at it and say, we have this little bit of support that the market struggled to get through. held and struggled to accept below once it was trading around this price here. And so those are the keys that we want to be looking for on these short time frames for some short time frame levels to look for opportunity. All right, last, let's go to look at the yen, which really has established an overall long-term trend to the upside. When we see these markets trending to the upside, what I've noticed here in this market, for the most part, it has fallen range bound or given back a little bit during the regular trading hours. We're still maintaining trend to the upside. So maybe if you're a futures trader, you're really going to have a hard time maybe somewhat trying to take advantage of the weakness in a trend. If you're a Forex trader, maybe these are the opportunities you can look for to hop in a trade and hold on to it a little bit longer. Or if you're trading in the overnight session, if you see these types of dips multiple times during the regular trading hours, we're going to find possibly some sort of opportunity to continue our trend to the upside. So that's really what I'm going to be paying attention to here. If we're opening up on a dip, like we've seen a couple times, it's a great opportunity to take that short time frame trend higher, get out, but be willing to get out of that trade relatively quickly. If you miss that initial move, this is where, and not very often do I say a counter trend trade works, but again, something we have noticed with the currencies is those regular trading hours are giving back just a little bit. We're falling into some sort of range and defining a little bit of a daytime frame trend or channel or range to look into. And you can look at some of those shorts because, again, we're talking overall time frame. On a higher time frame, overall trend is moving higher. But on the short time frame, we do see the weakness coming in and giving some opportunity. On that note, those are the markets we got here today. Hello, Felix, JLH, and Daryl. Good to see you guys. It is Wednesday. We're more than halfway through the week. I hope you guys have all had a great week so far. Again, we're not too far from the holiday week next week, Thanksgiving, here in the United States. So I will remind you once again, we are not going to be having a forecast and recap, but definitely going to be getting some other videos out to you guys just about some stuff that we do here or things that we do in our trading, and hopefully some interesting stuff for you guys to check out. I'm looking forward to some time with some friends and family in a safe environment, socially distancing, and being smart about everything so as not to get anyone sick and still be able to enjoy the holiday. I always enjoy a good turkey and stuffing. All right, as always, we're going to take a look at just a couple things. We'll start with Tesla. Yesterday we talked about Tesla getting added into the S&P 500, and man, people are happy. Tesla continues to move higher, $486. We're going to have a podcast coming out. I'm not sure if it's next week or the following week. Sat down with just an incredible person, really interesting story, and we actually talked about, he was an early investor in Tesla, and he really talked about a lot of why he was so passionate about the company and why he believes in it. I really, really latched onto it. I thought it was a really interesting conversation, so I won't give too much on it, but it'll be on the Limit Up podcast. So make sure you guys check it out. I'll keep you posted when that one comes out. Next, let's go ahead and look at the VIX. Whoops, I'm grabbing the wrong mouse here. VIX starting to push a little bit higher, just shy of 24 here to end the day. Obviously, we saw VIX spike at the end of the day. Makes total sense, right? We saw the breakdown in the equity markets there. Other than that, guys, our news, I saw something interesting, and it was an interesting comment. And it's hard to put into words some of the stuff that's going on, right? We're seeing equities making highs, but then we have this pandemic, but then we have possible vaccines coming, and then you think Boeing, FAA approved the 737 MAX. I don't know what to think, and it's hard to put into words. Now we're seeing the sell-off here in the equities, and I saw a line, and I really thought it said it very well. The worsening pandemic that brought on new restrictions have overshadowed the positive developments on the coronavirus vaccine. So I thought that was an interesting way of putting it. Yes, we have potential good news coming out of developments with some sort of vaccine, but it's not there yet. Therefore, the pandemic continues to worsen and overshadowing pretty much all the good news right now. So I thought that was an interesting way of putting it. Other than that, not a ton of news. Looks like New York City is going to be closing in-person schools, and we're seeing that across the board. So if you have children and you are trying to help with that in-home learning or the e-learning or virtual learning, whatever the terminology they're using, and it's affecting your trading, obviously put the kids first. Trading's always going to be there, and don't allow the stress of that to affect your trading, and vice versa. Don't allow the stress of your trading to affect that home life that we all have and we enjoy. Other than that, guys, that's what I got. Tomorrow morning, jobless claims, 7:30 a.m. Central Time, as well as the Philly Fed at the exact same time, 7:30 a.m. Central Time, and existing home sales at 9 a.m. Central Time. And that's about it. Unless you're a bond trader, we did talk about the auctions. Going to be plenty of auctions and announcements tomorrow. So if you're a bond trader or a notes trader, make sure you know what time those are coming out. There's a stack of them, so you can find them on forexfactory.com. Has a ton. Investing.com, econoday.com. I think the CME group has a economic release calendar as well. Always make sure you're checking that each and every morning. Very important, especially because sometimes things change unexpectedly. Maybe you were off a day, or maybe you had your weeks mixed up, or there's so many different GDP's numbers that come out. Advanced, actual, there's so much. So always checking the calendar every morning before you sit down and trade. Really important. Usually was the first thing I would do walking down to the floor. I would double check the board on any numbers that were coming out, and I had in my mind of what was supposed to happen. I'd verify against the board, and I'd grab myself my little hard card, and I would write them down. And I'd keep them right in my chest pocket, and so I could just verify at the times. So on that note, guys, I'm out of here. I hope you guys all have a great day. Stay safe. Wash your hands. Lemur, good to see you as well. Anyhow, stay safe. Wash your hands. Trade well. Trade smart. I look forward to seeing you guys in the markets. Take care, everybody.